It's December 4th, 2025, and I took a trade today on NASDAQ or NAS or QQQ, depending on where you trade. I trade Forex and futures, so I'm referring to futures for this trade. This was kind of a textbook trade for me personally, which I've not seen a textbook. I feel like I get a textbook trade, or I notice a textbook trade probably once a week. Yeah, that makes sense. Probably once a week, and I'll say why. So I always mark my sessions out. This is my Asian session, and I mark my Asian session lowest point, Asian session highest point. Then I move over and I go to London session, which is this area. I mark my London session low here, London session high, and I wait. In the London session is where I look to see where manipulation and liquidity has kind of shown itself. Yesterday or the day before, London session had this consolidation, so honestly, price could go up, go down, it doesn't really matter. In this session here, clearly London session takes out Asian, highs and reverses. Classic, which is fantastic. And then it gets close to Asian highs, kind of takes it out, not as dramatically or drastically, because again, it's it's kind of London session and it's peering for New York, and it reverses again, which is again still pretty textbook and classic versus yesterday where it consolidated throughout, or was it yesterday or the day before? Um, so now coming into pre-market, you kind of expect some sort of explosion, given that it's bigger volume, it's New York and London combined. You're ready for some action to take place. Here I see London or pre-market shows that all three Asian session high, which is this red line, the black line here, which I guess I didn't say earlier. Black line here shows previous day high, previous day low. So when looking at this, just giving this big picture here, Asian session does what it does. It didn't take out previous day highs. London session took out Asian highs, actually, and London, and previous day highs and reversed. And now pre-market does the same thing and takes out Asian session high, previous day high, and London high. And I'm like, okay, cool. So if that's a reversal, even though my daily bias was sort of bullish based on what I saw in ES and kind of NQ, it wasn't super consistent, but I kind of figured it'd be bullish based on the fact that um, these high time frame, like really important lines, are being taken out in the pre-market. I'm expecting some sort of flood down, um, and that's it. So when I saw this kind of go up, I was ready to prepare for a bearish market. So I kind of stay on the 5 minute. I don't like to drop to the 1 minute. I think it's just too much. And the 5 minute obviously gives me a better market structure, better price action in a sense than the 1 minute. Um, but I still use the same concept. When price reversed down and created this fair value gap, don't mind this one. This fair value gap, my goal was to wait for price to touch back in here before taking a trade. Price touched back in with this black candle. Price touched back in. When it came out, I took the trade. This is a 5 minute, so each candle, I was in this trade for 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes or so. This green candle that went to my take profit is how I got out of this trade. Then I thought about a reversal because I thought, hey, if we're gonna reverse and still go back bullish, because if the overall daily bias is still bullish, it could still reverse and go back up. I'm gonna look for fair value gaps. I'm gonna look for a bearish fair value gap to get invalidated and create a new bullish fair value gap with a touch in, as confirmation and going up. But I still haven't seen it. Still haven't seen it. We're just kind of in this. We're somewhere teetering between Asian London lows and previous day low as well as high time frame low. So we're just kind of here, which is cool. Which is cool. Ideally for bearish, I would love to see, I don't know what happened. I would love to see market drop down a lot lower, yeah, and come down to this. But that would mean me expecting price to have made a 300-point move. That's a lot for a day. Not that it's not doable in the New York market, definitely is. Um, but it's a lot. It's a high expectation. I also drew this equilibrium here, this 4 point, because ideally I wanted to see, it just gave me additional confirmation, not just the fair value gap, that price would touch back into this fair value gap box and return. And it did. It crossed over this green line at 50%, which gave me the confidence to go in and trade that downward. I did everything I was supposed to. I really didn't get out on time. I did not set a take profit. I don't set take profits as much, which is stupid, but it's just my way of operating. I entered in on two NQ contracts. I kind of went back to NQ because I'm tired of the MNQ. And my overall gain, because I didn't set my take profit, I didn't set a take profit and I didn't get out fast enough. 634. That's over 4 accounts, so that's about 2,400 or so. Today is not the day that I'm gonna get funded because I really needed 1,500 to get funded. So I was down more or less by it. Where I did hit take profit was actually at 1,500 here. That would have given me 3 funded accounts, but I didn't get out fast enough. It retraced back up. Of course, part of me was like, oh, just wait for it to go back down, wait for a fair value gap. And then the other part of me is like, nope, you're done for today. It's 10:48. Because it's going to do this consolidating thing. It's kind of annoying for a little bit because volume now kind of drops a little bit until about power hour, and then volume picks back up again. And the whole point of day trading is to get in and get out and not spend your whole day. At least for me, it's not for me to spend my whole day trading. So I'm good for now. And I definitely do not want to lose my capital, protecting money, protecting gains. So that was my trade for today. I did everything I was supposed to. I was patient enough. I took my trade as I should. I waited for confluences. I think I waited for the right time. Let me see. Um, Kind of technically, maybe 10 minutes earlier than the macro, but everything met my time frame, so I'm actually good with this, and we'll see what happens